All right. Welcome, everybody. I'm so glad you're here, especially for all of our families and individuals that are going to be watching the replay. This is going to be an intense 1 hour. We're actually going to do 30 minutes of sharing with you how we are helping families get into home for less than $500. And then I'm going to share with you guys some Q&A time. And I actually got a live calculator that can walk you through what your debt to income ratios are, and really guide you on the best down payment assistance programs that we're working on right now that's helping families get into homes. So I'm excited to share this with you. Let me go ahead and share my screen so you guys can see exactly what's going on here. So just go ahead and comment and let me know if you can see this here in just a sec. Let me just see here. All right, tell me if you can see the screen here behind me. Yes, and tell me if you can see me in this in there, or if it's kind of yes. Okay, and am I blocking the slides? That's the one thing I always like to see. Yes, I am blocking. Okay, let me see if I can change the layout because I don't want to block that. Let's go here over the shoulder. Okay, that can work too. How does that we can see? Let's just do content. Okay. So this is, let me go ahead and start this. And so you guys can see this. This is me. I do a lot of events. I'm really big in the community and being able to share with a lot of families and friends and how we grow our businesses. I've been a business owner for quite some time, so I like to be able to share that. So let's just see here. Okay. So let's see. And are you seeing the full screen now? So let's just make sure you're seeing the full screen in there. Yes, just make sure you guys can see that full screen. Let me know if you can comment in there that yes, you can see the full screen, or if I need to update it and change the layout, let me know. Go ahead and comment full screen, or if we need anything. Let me see everyone. Can you, let's see, share the layout? Okay, looks like we've got the full screen. Okay, good. All right. All right, perfect. Thank you so much, Nicole, for sharing with me. I appreciate you. All right, so these are some of the families here that I help. A little bit about me, just so you know who's presenting. I'm a mortgage and real estate broker, a mother, a wife, and I'm a voice for families who were never taught the rules of money, but were expected to play the game anyway. I created Mortgage Mom AI. It's an AI that is set to close the gap. There's millions of families that are struggling right now with home buying and what options we have. And there's a big frozen market. And so my goal is to help us unfreeze. And a big way of doing that is by helping people with their credit, and helping them understand down payment assistance programs and helping them leverage their current equity, interest rates, and being able to shift from renting to long-term stability. I did this for myself. So now I help other families to stop guessing and start building with strategy. This is more and bigger than just real estate for me. This is about changing a family's trajectory in one generation. So that's actually my sister-in-law on the top there with her family. This is me and my little family here as well. So I'd love to be able to share that. Let me just go on to the next screen. Let's see. Okay. So I've been rebuilding over 25 years as a business owner, built everything from nightclubs I've owned, a home daycare, a singles events company, now mortgage and real estate brokerage. But here's what really matters. I've rented for years. I had to fix my own credit after divorce. I had to figure it out the hard way because no one showed me. And every place I was going was giving me very vague answers. And so, trying to figure out a way for stability for my family. Well, everyone around me made it look easy. People were buying houses, people were buying second homes, and I'm going, how come I can't even fix my credit to get myself into my first home? So I had to learn everything from the beginning and not wasting time on other third-party companies that were going to say they were going to delete everything, dispute everything, and actually became a mortgage broker. So that's why I became a mortgage professional because I was tired of waiting for another loan officer to tell me when my clients could buy. Like that was my biggest thing. I was a real estate agent and I would have, my clients ready and they just needed 10 points, they needed 20 points, and we were getting the runaround. I got so tired of the runaround that that's where I decided I'm just going to get my license and I'm just going to figure out how to talk to these banks. I'm going to figure out how to do this myself. And that's where I became, and that's how I became a mortgage loan officer. So, I'm just not breaking cycles. I'm building homes, healing trauma, and creating inheritance so my children and yours never have to start from zero again. So I'm really big at teaching our children how to own real estate. My daughter's 20 years old. She just bought her first house. I helped her leverage these different programs that we have available right now. So it's not just me I'm talking about. I'm also very big at making sure my children also are a part of that. So that's a big deal in that space. Um, Let me go to the next slide here. Okay. Why I wanted to teach this? Well, we went a little bit. Let me just go real quick back to this one. I don't know why my slides are being funny with me, but they are. Let's see. So let me just see here. Oh, all right. Maybe I'll get out of this big screen thing here going on. Okay, good. So let's see. Let me move this out the way. So I have a big family. I'm the oldest of six kids. And so if you don't know if you're ever from a big family, but this is kind of like all of us saying happy Thanksgiving. I share this with you because this is where this is my fam, right? Like and I treat everybody like you're my family. And I treat everybody like we're just getting started and we're going to go all the way to the end. Your stresses, your struggles, anything that you're going through, I actually feel like I'm with you in that same space because I know what it's like to start and feel like there's nobody there. So I've been there. I know exactly what it feels like to be alone in this situation of trying to buy a house. So my goal is to help my clients not feel alone. I didn't grow up being taught how money works. I grew up moving around a lot with my dad in the military. And after my parents got divorced, my mom was a single mom. There were times that we were homeless. We were living in a car. We were in shelters. And eventually I was in foster care. But I still grew up feeling the pressure of it all. It always felt like everything that actually mattered was hidden and gate kept. Then I realized we're not behind. We were never given the blueprint. And that's why I created this to give families back their time, clarity, and real strategy. When you align your vision with the plan and use the right tools to remove the overwhelm, you stop the rent cycle, you start building wealth and create stability, freedom, and a new direction for your family. I share this with you because I want you to know, like, I've been there. There's nothing that you can say to me that I technically have not potentially either gone through or one of my clients have gone through. I feel like a lot of them have led the way for the people that I'm here to serve. And that's kind of like we've already built the process. After my divorce, my credit dropped to a 515. I paid companies to fix and nothing really changed. So that was like disputing things, going ahead and doing that. Have you ever in the chats, have you ever used a credit repair company to fix your credit? Go ahead and write in the chats real quick. Yes. I have used a credit repair. No, I'd love to hear, kind of have some engagement here. So we're not just following along, but actually learning what's getting ready. Have you ever thought about using a credit repair company? I have. So no. Yep. April says, yes, she's used credit repair. So if you have used credit repair, some of them I know do work, some of them do not, but the consistency around that was really shaky because in the mortgage industry, things can pop back up if they sell your debt to another creditor. So there's always like this perfect timing that in between something getting deleted and something getting disputed, if it pops back up on your credit while we're closing, it could ruin the whole deal. So that's kind of what really was like, I can't have, oh, Tammy says, yes, she has. Okay, great. So when I have clients that are putting thousands of dollars, a 401k, or they're leveraging this great down payment assistance program where they're getting $15,000, $20,000 to buy a house, the last thing I want them to do is be putting in a 60-day notice into their landlord, into their their person or excuse me, their landlord or their property management company, and then finding out that something hit back on their credit. And so to me, it's not worth it for if we have to pay something for 300 bucks, 600 bucks, or we have to negotiate something, that for us to be in the position where we are out $15,000 in down payment assistance programs, getting our earnest money deposit potentially not back, wasting our money on inspection and appraisal, because I can get the earnest money deposit back most of the times, but the inspection and the appraisal, those are hard costs. So you're spending 600 bucks on appraisal, 600 bucks on inspections, $1,200 out of your pocket that technically you will not get back. And you have to start all over again. So to me, when I became a mortgage loan officer, I wanted to learn how can I save my clients from not ever having to go through that stress of working with a credit repair company and potentially something popping back up. So that's when I really got into learning the credit on the mortgage side. A big part of where I also come from is that everything changed for me back in 2022 when my son Michael crossed over to heaven from a fentanyl overdose. Unfortunately, I share this with everybody, and I share this because when death comes knocking, as much as heaven comes knocking, so do things. So a lot of my life of what I was going towards really shifted for me, and I'm like, okay, everything I do has to have purpose. Everything I do has to plant a seed. Everything I do has to have something that is meaningful, because I know where I'm going with my son. He's already got open arms. We talk every day. The time that I have left here is with my other children to help raise them and connect with them. But in the meantime of that, helping families, doing what I do is a real big part of why I do what I do, because I really feel like if I can help a family create stability, pass on generational wealth, I see what it's done for my family, from renting to now owning rental properties. I've bought and fixed and flipped homes, made hundreds of thousands of dollars, had six-figure plus checks written to me. And so real estate really is that big. And thank you, April, for saying so sorry you went through that. I appreciate that. It is definitely part of my story and part of who I am. So I share it because I feel like this is the direction of how we can start building so our children have a legacy in what we're doing here. So let's get into the good stuff here around this. Let me just go to the next slide here. Your story is not your weakness. So let me go back on here. Your story is not a weakness. It's your strategy. When families come to me and they're like, "Hey, this is what's happened. This is what's happened." I'm like, "Okay, let's do this. Let's do that. Let's figure out this. Let's go into, whatever we need to do in this place so you can be able to leverage that." I had a collection, I have a charge off, I had a bankruptcy, that's a strategy. Now I've worked with so many families that have had every single thing you could possibly imagine, from their credit being stolen, from all kinds of every single thing you could possibly think of. And I know now how to help families, because these were kind of like my training families for the first 7, 8 years of being in this industry. And I felt like the universe was always sending me families that needed that extra help because they were denied by other lenders. And so I was like, okay, I'm going to make this different for everybody. I'm going to create something different. Have you ever been told no by a lender before? Go ahead and comment in the chat if you've ever had your credit run, if you've ever been told no in the past. Go ahead and put in there that you have had no, or you didn't get a strategy, or you were told no, or you were told maybe it was very ambiguous. You didn't get like a plan of how to that. So I'm just going to go ahead and open up your chat box in there. I like to be engaged with this. This is a live workshop for us to be able to share that, so I can be able to see with you guys on that. So let's see here. Let's see when you guys are chatting in there. Go ahead and add in there if you've ever have had a your credit ran, or another mortgage broker say yes or no to you in the chat room, in the chat box there. Let me just see here, everyone. So I'll wait for a couple of seconds while you guys are chatting in there and sharing if you've ever had your credit run and somebody tell you your exact strategy and what you should do next, what you shouldn't do next, all of those things. That's really what I really focus on, is helping families know the exact strategy of what's going to be next. So we'll get that going in the chat. Everybody just can jump in there for that. So here we have Chastity and Kylie. They are self-employed. Yep, I've seen that. We're self-employed. There's definitely, what can you do when it comes to self-employment, and being able to leverage your income the right way. I actually have a CPA that I work with that we kind of go through your numbers backwards. So you're not claiming too much, but not claiming too little. So you can purchase a home based on your income and your write-offs. I know that as self-employed myself. Miguel and Lakita bought a home for $200. And I'm going to share with you how they did that. I also have one of my multi-gen families, grandparents and kids all bought a house for $31. I know when we did this, I was like, oh my gosh, we all have different paths that brought us here. My goal is that you feel safe enough to start here, because buying your first home isn't the finish line. It's the beginning of building real wealth. So this is a real big part of what I believe in when it comes to that. And let's go to the next page here. So these are families that I've helped starting the process of buying a house. We felt lost. This is Jessica. They're both named Jessica here. And we felt like we didn't have any control over what happened. And after speaking with Renessa the first time, we immediately felt that we were going to be taken care of. Our credit wasn't horrible, just needed a bit of work. And so we were able to get and found me on social media and reached out. And now they are happy because they bought their house. And then here is my other family here that also bought their house. We did a little bit of credit repair. Renessa really understood our needs. I just wanted to share with you guys those success stories, because I'm not just talk, I walk the talk and talk the walk. So this is also, see if this plays here for us. This guy is sharing, Manuel, he's sharing, how much did you buy your house for? $31. So there's that. And then this one we just finished. I just closed on him not even 2 weeks ago. I hit pause on that one, and I'm just sharing with you. And so this gentleman, we'd been working together for rent to own. My internet's a little bit slow, so I'll just let you know that he ended up buying his house. He bought it for 0 down. He got all of his closing costs covered. We were able to get all of his down payment covered and his earnest money deposit refunded back, and he got a 5.25 interest rate. So just today, the rates alone are at about 5.97. So he was able to get a lower interest rate than what the current rates are, save $34,000, and get his full earnest money deposit back. So this is where we talk about strategy, and strategy is a really big thing, because if you don't have the right person in your corner, they're going to end up charging you. Your potential loan officer can be able to leverage different types of programs and different type of closing costs, and being able to leverage different types of incentives and interest rate buy downs and concessions. So I'm going to go into those. I know those are a lot of words, but I'm going to share with you guys what they are exactly. So if you're tired of rent going up, if you feel stuck, obviously you guys are all here for the right reasons. I don't need to go into this into detail. But one of the big things that I look at is that when you own a house, a lot of the families I help, we help leverage them to turn that house into a business. So right now we help families that currently buy a house for less than $500. And then we help them turn that into a senior care, co-living, healthcare, home businesses, childcare, foster care, multi-generational houses. This is where you're able to start leveraging an extra room. You're able to start leveraging an ADU, which is an additional home area, turning your garage. So my biggest thing is that you want to be able to look at real estate as an investment that you can eventually turn into a business if it's something you're open to, especially in this economy right now, where we need as much income as possible. So being able, and I help families leverage this by turning this into a business. So this is how I step up and really help families. I have all the connections here. This is something that I personally help with. So this is a part of my business coaching of what I do with on top of real estate, because this is the next stage of where we are. So what I focus on is one house, three checks. Getting you the first house is easy. Now we want every 12 months be able to start doing that, rent a room out, turn it into an Airbnb, be able to start leveraging you into a new place of building wealth. So let's go into what potentially is holding you back. So I'm going to go into what is your debt to income ratios? What about student loans? What about sellers paying your closing costs? 99% of what is out there with real estate agents and loan officers, there's only a couple areas that are gate kept from all my clients, meaning that you can go online and find out your debt to income ratios. You can go online and find out the current interest rate. You can go online and find out what type of potential down payment assistance programs are available. What you cannot go online with, and what is gate kept right now, is a credit repair company called Credit Expert. Credit Expert is where I go, and only licensed loan officers have access to this program. This program is strictly for license. I mean, I wish that everybody could have access to this, but this is where there's gatekeeping. And so when I look at in the industry, I look at what can I do and how can I empower you to do things on your own. And there's only so much that you can be able to do on your own before you need an actual professional to step in and start doing and helping you. So this is one of my clients right here. I blocked out their information. She had a 548, and in 4 months, which technically 120 days, we were able to get her score up to a 600. She had multiple collections. She had multiple even charge-offs, and she only really needed to negotiate and pay off one to get her score above a 600. So most collection companies, most credit companies are going to tell you you need to negotiate 4 collections. They're going to tell you have to do a lot of different, they're going to want to leverage all of this because they get paid more if they can dispute more. But in reality, she didn't need to do all of that. She would have wasted a lot of money if she was doing that. So I go in and I find out exactly what we need to do. Here's another client. We needed to get a down payment assistance program. This particular down payment assistance program needed a 600 credit score. She was at a 567. Her lease was ending in 60 days. So we were able to get her score from a 567 to a 632 in 30 days. She has multiple collections. She only needed to pay off one collection. There was a whole list of collections. She only needed to pay one off, and her score went up 632. So if you need credit support, at the end, I'm going to give you the option on how you can get the credit support counseling that I offer, because this is all it does right here. It goes right through exactly what you need to do and what you don't need to do, so you're not wasting money, which is like the biggest thing. Here's another client. Had a 504 score, went up to a 607 in 90 days, and had multiple collections, but we only need to pay off a few of them. This was not all that they needed to pay off, and they were able to get their score above 600. So this is, again, just kind of sharing with you guys, this is how we're able, this is a system that is this is what's kept. Right here's another client right here, went from a 490 to a 655. This one, because they had some recent debts, we had to leverage a 2-year plan because they had so many debts that were just recent. So again, the time of your debts is going to make a big deal as well. So this is how we're able to go over 160 points. We were able to get her score up, or their score up. So let me just share with you this next slide on how we're going to make your, where did we go here? Oh, we didn't go there. So how many of you guys know how to do your debt to income? And you go ahead and comment in there if you know your debt to income ratios. Do you know how to calculate your debt to income? Yes or no? Go ahead and comment yes if you know how to calculate your debt to income. Comment no if you don't know how to calculate your debt to income, and let me know if you have. No, nope, okay. All right, so good. So now I'm going to share with you, no, I do not. Okay, yes, Carver says yes. All right, Carver, you're one of our advanced ones. Thank you. I appreciate you. Okay, Marlene says no. Tammy says no. Okay, so I'm going to share with you how to calculate your debt to income ratio here. And you can use this same technique. You can grab a pen and paper and you can be able to leverage this now here. So this is if your income's at 8,000, 5,000, 3,000. The bank, the lending companies are going to want to see 50 to 57% is what they're going to leverage for your debt to income ratios. Okay. So that means that they're going to use 50% of your income. 57 is the max. I prefer us to stay at 50% because if we're doing conventional lending, then we want to be around 49%. But this just gives you an idea of if you're at your income, you multiply it by 0.50, 50%. You divide it by 50%. So either way, you're going to get your 50% numbers. Okay. So whatever you add your total income before taxes, before anything is taken out. Now, if you have any type of like loans on there, some people have some different types of your company can provide different deductions and things like that. Those numbers are going to be part of your debts. But so before anything gets taken out, taxes, insurance, all of that, you're going to put in there your full number, and then from there you would go ahead and minus your debts. So for this particular client, we're going to go on the first numbers here. They're at 8,000 a month. If you were to do 50 to 57% of what the bank is going to give them, they would make a home payment of 4,000 to 4,500. They would be home shopping between a $600 to $650,000 house. Okay. If they have debts, that's if they have no debts. So the first three columns are no debts. Now you get to the the fifth column. The fifth column is debt. So now this is where you're going to start adding your debt. $1,000 car payment, $500 in credit cards. I put NEG there for negotiable. This means these numbers can be negotiated. We can pay down a credit card. We can do a student loan repayment program. We can pay off and negotiate collections. These are the numbers that when you work with me and my team, we negotiate these numbers based on where we need to be on your DTIs. If we need to negotiate those, or if your income is great, no worries. So then once you deduct your debts, then you get a new house payment.
Yeah.
That's going to be this new home payment number here. So this is, and then now you get your new. So do you see how it goes from $600,000 to now almost $400,000? These are all estimates. This is not a guarantee to loan anything. I have to say those things because I'm, in the mortgage industry. But this is kind of where you're going to be at here. And these are just estimate numbers because we do have numbers that are in the 3.99s and things like that. But I like to give you what's happening in the market right now so you can know, and then we can always adjust that. If you make $5,000 a month, this is where you're going to be at with your payment. This is where you're going to be at on a house shopping minus your debts, and look at how much it changes here for what you're going to be. So your debts make a huge difference on what you can buy. If you could notice, you go from almost being able to have a $200,000 house to a $400,000 house, with a $5,000 income from from a $3,000 a month payment all the way down. So this is going to give you some insight. And you're going to get the recording to go through this, but I have a calculator that's going to do this for you. So you're not going to have to worry about having to go through all this by yourself. I actually have a calculator that you can leverage that is going to help you with this as well. And then I'm going to have a live Q&A in just a few minutes to be able to walk you through this as well. And then you can get some insight on that. So let me just share with you the next slide here. So what you want to know that's a really big thing is that this is where the deals are won and lost. So debt to income, that's what DTI means. Whatever you have in collections, they're going to count 5%. So let's say you have this old collection that's like $3,000 and you think, oh my gosh, I'll never be able to buy a house because I have this old collection for $3,000. Well, the banks don't look at the 3,000. The banks only look at 5% of that. So they just look at that you have a debt for 150 bucks. That's all they see. The banks do not leverage your debt on the balance, they leverage the debt on a percentage. And that's important to know. It's the same thing when I have clients that have high student loans. If you have a high student loans, they're not, oh, I have, let's just say you have $100,000, which I have some of my attorneys and some of my doctors and my nurses and even my teachers at ASU have some doctorates that they have, and they've got hundreds of thousands of dollars in student loans. No, the banks are going to go, we just count a percentage. So if you have $100,000 in student loans, they're not going to count $100,000 in debt. They're only going to count $500 in debt. And in some of our doctors, nurses, and some of our different professions that are in the medical field, the first responder fields, we actually, well, they will not count student loans. So it just depends on what your background is. This is where you're going to, these are kind of those information that could be gate kept, but you're going to want to know exactly where you apply in this area. And then the credit card. So I have clients that go, oh my gosh, I have a credit card for, $50,000 or $30,000. No, whatever your payment is what they're going to count it as. So they're not going to count the full, they're going to count, look at here, when I put on here $200 in credit cards, that means you could have a $20,000 a month or $20,000 credit balance or a credit limit. But if your payment's only $200, the banks are just going to look at what your payments are, not your balance. So it's important to know those types of things when you are calculating that. And so if we just adjust one thing here, if we just shift one thing, you can literally have had clients approved in days because we just needed to shift a couple of these items. And not every loan officer, they might look at your debts and say, oh, this is going to be this is going to be that. We've actually negotiated these debts, and then my clients were able to qualify. So it's really having somebody in your corner that's going to be wanting to do that and spend the time. A lot of people, if they see bad credit I won't even say bad credit, I will say working credit. I don't even like to say bad credit. So my apologies on that. If you have working credit, it needs to be worked on. Who wants to do the work? So that's where we step in. All right. So how down payment assistance work? Before I jump into these numbers real quick, so this is the bread and the butter here. Did that make sense to you guys on down payment on DTI? Go ahead and comment if this made sense, or if you feel like, no, I didn't make sense, or yes, I need some more, or just give me kind of a pulse of where you are with the down payment, or not down payment, but with the debt to income ratios. Do you understand how you count 50%, add in your debts, and then you got your remainder of your payment there? So if you can just add into the comments that you kind of get that, or yes, it made sense. Carver said yes. Ashley says yes. Okay, good. So April says, wow, was this helpful to you? If you want to write in there, was this helpful? Did this bring some insight to what you're doing? Yes. Okay, good. Yes. Okay. So yes, made sense. A little more info, helpful. Perfect. Yes. Okay, great. That yes made sense. Very helpful. Absolutely. Okay, good. So this kind of gives you some insight of how this whole side of the debt to income ratio works. My goal is to help families get as much money as possible to buy a house, and then leverage the best payment. So that's where we're going to go into next and kind of share this part with you on how we do that. So this is going to be our down payment assistance, FHA, or conventional lending. So this is on a $400,000 house. Houses are kind of in that price point in Arizona. You can go pretty much anywhere and get a house around this number. Obviously, if you want to go higher, we can go higher numbers, but I'm going to give a reference just to keep us in the middle ground of where we are. Down payment is $14,000. So if you're buying a house, we want to be able to use down payment assistance programs that are going to cover that 14 grand. I have clients that have 401k money. I have clients that have gift money, inheritance, cash, savings. Great. You will be able to save some money on your interest because you are leveraging your own money. So your payment is going to be less. But I kind of look at it as you got to pay to play. So if you're going to leverage someone else's money, why not leverage it to buy an asset? So you're looking at anywhere between $150 to $250, depending on how much we're borrowing difference. For this particular client, the payment difference of $27.59 minus the $24.82 was $277. So for them, they were like, if I come out of my pocket $277 a month difference, that for them was a big deal. Or for some cases, it's not a big deal. And they say, hey, I can pay the $277 and I can buy a house. And for some cases, it's only a certain amount of time that you're paying that. This particular down payment assistance program at the 277 is a little bit higher than what we have right now. So actually we have a lot more better programs in this. But at this time, I want you to leverage what I say the worst case scenario. I like to always tell my clients, let's plan for the best, but also plan for the worst. So we're not over leveraging ourselves on our payment. We don't want to have a payment that's going to hurt you. You don't want to have a payment that's going to be too much for you. So let me just go through this with you. So each line here. So this is what the principal and interest payment is. So we have 400,000. Down payment is 14,000. Principal and interest payment is 27.59. $130 is our homeowner insurance. 165 is our property taxes. HOA is 60. Now, if you don't have HOA, you take that off. Mortgage insurance is 176, and this is our monthly payment of 32.90. Estimated closing cost is between 2.5% to 3.5%. So this is where it's going to be between $10,000 to $14,000. So just look at these right here. I want everyone to just take a quick notice that when you're buying a house, you have to have a $14,000 down payment and you have to have closing costs of, let's just say, $14,000. So just to buy a house, if you were not using the seller's money and you were not using down payment assistance, you would need $28,000 to buy this house. That's just off the top. So this is not including your inspection and your appraisal and your earnest money deposit. So what I do with my clients is I go, let's use other people's money. Let's use the bank's money for the down payment and let's leverage our seller concessions. This is actually the market right now. Back in 2022, back in 2021, none of the homeowners were covering that $14,000 concessions. So our clients, even if they had down payment assistance, they were still having to come out of the pocket 14 grand, 10 grand, maybe if we can negotiate 3 or 4,000. Right now, we have such motivated homeowners that don't want to reduce the price of their house. We're even, in some cases adding it or negotiating a 50-50 difference there. And our homeowners are giving us the 14,000. The banks are giving us the 14,000, and we're getting $28,000 for our clients to buy houses. This is how this is happening. This is not something that happens all the time, but I'm giving you an insight of what's happening right now so you can make the decision of what's going to work for you and your family, because as you have to renew leases, as you have to start continuously paying rent, you want to know what your options are right now based on this market. And as soon as interest rates drop back down, hopefully they do soon, but if they don't, then we're going to go back into a seller's market, meaning sellers are going to go, I don't have to give you any money. And I have multiple offers on my house. And why give away $14,000? You're going to get offered out. You're going to get priced out. You're going to be in a position where you're going to have to continue to stay renting because you won't have the options that this is available. I've already went through that in 21 and 22, so I know those things happen. So this is where we're able to leverage those options. Let me just share with you the next part here so you know what is expected after this. And let's go to the next slide. So you have your earnest money deposit. That's $1,500, can be refunded at closing. I just had a closing that happened today. He got his full $2,000 earnest money deposit back, full $2,000 going back to him. He's just paying his home inspection and his appraisal. Home inspections, you can use a credit card. I would not max out a credit card because you don't want your credit card to be limited. But home inspections, you can even have somebody else pay for your home inspection. I can have the seller cover your appraisal. I've had that happen as well, where the seller covered the appraisal costs. And so all we had to do was pay the home inspection. I've even helped clients in this situation if we really needed that. If we had like a great credit score, but we're really low on funds for cash to close, we've been able to cover that. Down payment and closing costs. Remember, we were getting those covered by the bank and the lender, or excuse me, bank and the seller. So really $2,800, but we're getting that refunded at the end. So you do have to have some cash at the beginning. Yes, you're going to walk away maybe spending $500 to $700 at the end of the day, but at the front, you want to at least have 3,000. Now, the big part of this that a lot of loan officers and a lot of things on the internet, ChatGPT, everything that's out there that they don't tell you is that reserves. Reserves is a very, and I wanted to add that into this, is reserves is something that you technically don't need to spend, but depending on your credit score, especially if you have new credit and we're just starting your credit score they sometimes want you to have 1 month to 3 months of reserves. So if your monthly payment's $2,000 a month, they might want $6,000 sitting in reserves. This is important to know because if you are looking at buying a house, the higher your credit score is, the less in reserves they want. So sometimes I might boost a client's credit score just because they might have a 620, a 640, a 660. I might boost them to 700, 720, just so that way they don't have to deal with the reserves. So these are things that we look at, again, strategy with all the clients that I work with in the situation, so that way they can be able to leverage that. Reserves are a big thing. They only leverage those reserves based on your credit. So reserves is just a credit stipulation, a credit condition. So that's where I work with my clients on that. Now there's 3 different down payment assistance programs. I'd like to be able to share these 3 with you guys. There's forgivable, deferred, and repayable. Each single one of these programs are different based on 1, your credit score, and 2, your payment. So a forgivable program, people are like, oh, I want a forgivable down payment assistance program. Great. You don't ever have to pay it back. That $14,000 is forgiven after 3 to 5 years of living in that house. You never have to pay that $14,000 back. This is usually we have forgivable programs between 620 to 640 credit score. The forgivable programs, the one thing about these programs, and I always tell all of my clients, is you want to be careful because sometimes these programs could have the highest interest rates. So even though you think, oh yeah, my loan is completely forgivable, well, if you have a higher rate, your monthly payment could be $300 more. And if you went with a repayable program, your extra payment might have only been $70. So sometimes the words forgivable doesn't necessarily mean that that's going to be your best interest. It comes down to the numbers. So a deferred program is due when you sell or refinance. No monthly payments, strategic if you plan to move within the next 5 years. So a deferred program is usually if you're doing a down payment assistance program, they don't want you to sell that house and they don't want you to refinance that house within a 5 to 7 year period because that's how they're making their money. Every month you make your payment. That's how the down payment assistance programs are leveraging and making that money. The last one is repayable. You pay back sometimes with interest, can still be worth it depending on the rate in your timeline. This one right here, there's lots of different programs between repayable and forgivable. I go through each one of them. There's about probably like 5 or 6 really good programs that we go through and we see based on your credit where it's at and based on your payment. I will say that about 50%, I'll say more like 70% of my programs, we end up doing a repayable program. And the reason is because lately, a lot of the forgivable programs the interest rates have just been way too high. And my clients are in the 7 or 8s. I'm like, it's just not worth it. Whereas if we could do a repayable program and they amortize it for 30 years, my clients are making a payment of like $60 a month to get 14 grand. And they would be paying that anyways, renting every year. And now they get to own a house. So to me, it's important to go through those numbers on what that looks like. If I was to tell you right now, this is the best program, that's the best program, it's going to be based on your credit. This is where you're at. So that's where that strategy comes in. Some of them do have income limits. The programs I leverage right now do not have income limits. So I have clients that make 180,000, 200,000 a year, and they're able to leverage that in that place. Let's finish up here so I can be in time. I want to make sure we get this and go in here. So how the 500 actually happens, we get your down payment assistance, we negotiate your concessions, we do the loan structuring, right? Based on what we need for your monthly payment. And then we make sure your debt to incomes are optimized, the right debts are addressed, you enter the transaction from a position of strength. So we leverage all of these areas directly for you so you can know what is your plan? This is like the biggest thing. It's like, what is my plan going to be like? And it's unique for everybody because everyone has different options. You want to know what your cash to close is. Before you go house shopping, what's my cash to close? And that's what you need to ask your loan officer, preferably me. I'd love to be your loan officer because I'm going to go through all of this with you and we're going to make sure. And then we're going to negotiate that when we come into the real estate side, because I have my real estate brokerage license, and my mortgage license. I'm making sure that our cash to close is covered with our down payment assistance program and our concession so you can get your earnest money deposit back. If we need some wiggle room, then at least you're going to know that beforehand, before you sign that contract. You're not going into buying a house and then finding out when you go to close, oh, you need $7,000. Well, why wasn't I told that before? Well, the down payment assistance program only covered this much, and your closing costs are this much, and the seller's only covering this much, and now to pay down your interest rate, it's this much, and so now you need $7,000 more dollars. Has this happened before? Yes, I've seen it where the numbers are not clear for people, and they get stuck in a situation, and it's not fair, and it's really frustrating, and it can be very heartbreaking to see people that don't ever want to go house shopping again. They give up on house shopping because of how they've been treated in the past. So my goal is that we know everything before we even sign a single thing, before we even go out house shopping. We know exactly what our cash to close is. So do I need reserves? What's my cash to close and what are my reserves? Because if you don't know those two things, then the loan officer can come back at you and say, hey, your cash to close is covered, but we need a bank statement showing you have $7,000 in your bank. Well, how? I didn't know I needed $7,000 in my bank. Well, they need reserves. They're not going to use it. They just need to see that you have that. Again, so you need to know your cash to close and your reserves. Those are the two biggest things that you can leverage right now to make sure that you are solid. Most people don't know these exist. So right now there are 3.99% interest rates right now. For military and VA programs, I have 3.75%. They're covering your full $15,000 in closing costs. And that we have concessions that are covering solar being paid off, every single thing that you can imagine. This is how I'm able to leverage families getting into homes for under $500 because we're negotiating all of what you need because I know if you need reserves and cash to close. I know it. I know right from the beginning what my clients need. We're not walking in anything blind, and I'm negotiating with them before I even step into the house. This is not a 2-year process. We make credit adjustments that can happen within 7 to 30 days. We can do loan approvals within 24 to 72 hours. We can go out house shopping and have you under contract within 2 weeks. Not everybody needs it this fast, but I have had families that their lease is ending. I would say if your lease is ending in the next 6 to 12 months, you should have a plan so you know if you need reserves. You know if you need your cash to close, and you know if we need to bump your credit so that way you don't have to deal with those reserves. And that's what I leverage my software for because that software is important to have. Every family that you heard tonight or every picture didn't have perfect credit. They used our credit counseling. Didn't have a huge savings. They used our DPA programs. They just had a plan, leverage our expertise. You don't need perfect. You just need our team. So that's a really big part of what I believe in being able to have that. The cost of waiting. If you decide, I'm just going to wait, I'm just going to do this, just so you know, you could be costing plus not just your rent, You could be leveraging your how much you're spending every month for your rent, how your 1 year is going into 24,000. You're building up somebody else's wealth if you continue to wait. And right now, because we're able to get families into houses for less than $500, this is where you want to take advantage of those options. So this is what I'm providing and helping with my clients in doing that. We help you with your credit. We help you if you need income help, cash strategies, loan program matches. This is what I do with all of my clients. I also help you leverage not just if we're going to be doing one house, three checks. A lot of my clients go, Renessa, I just want to buy a house right now. In 12 months, I want to buy my dream house. Perfect. Let's get a house that can make you money then. Let's get a single story. Let's get something we could turn into a co-living space. Let's get into something that we can be able to leverage. So now in 2 years, you have two houses, three houses in 3 years, 4 years. Now you've got $1 million in assets. Yes. This might sound like a lot for some people. For some of my clients that are looking at real estate as an investment, real estate is a cash flow, real estate is a potential income. This is what I help my clients do. It's part of what I built with my businesses. And so I think you should know that it's out there. So I provide a $99 credit counseling. This is going to give you a free credit report. It's going to tell you what to pay, what not to pay off, what trade lines you should be adding if you need to, your timeline to make sure you're mortgage ready, personalized action plan. This is going to go through everything I went through for those people that were able to see if it was going to take them 60 days, 90 days. This is how we go through this program, or the counseling is going to go through your whole entire credit report from collections to debts to everything. So you can know, am I 30 days out? Am I 6 months out? Where am I exactly at? The next one is if you want to learn how you can turn your house into a side business, how you can actually start being able to leverage that house as potential income strategies, senior care, co-living, what houses to look at. That's going to be a 197 because now I'm going to be working with you to build that property up into a business plan. And then if you want to just book a strategy call, you can also do that with me. That goes through that, but the strategy call is going to say, hey, you need to book your credit plan or if you need to start your credit counseling, or if you're ready to start, hey, my credit is good. I just want to be able to start leveraging that now. And we can do that as well. So questions before I open up the thing here. We're going to open up to live Q&A, but before I do that, what's your takeaway? I know I had a lot of talk, but there's 7:25, and I'm going to share one last part because you're going to get my home calculator here. What is your takeaway from everything, from down payment assistance programs, FHA loans? We have the interest rate buy down, and I just want to show you this. That buying one house, you can have a payment from an $1,800 and it could go down to $1,400. So normally it would be $1,800 and it goes down to $1,400. You're going to save over $400 a month with our 3.99 programs. So that's going to be, and I'm going to show you how to do this, but I want to just jump in with you guys, and that's going to be our last part there because I know it's at 7:25. I'm like, oh, I try to go as fast as I possibly could, but this is where we are here. Any questions? What are some of your takeaways with knowing your cash to close, knowing your reserves? Go ahead and comment in here. Where are you at? What kind of information with everything that we talked about today is what you're walking away with? What does that look like for you? Who would like to jump in the chat and just share what your big takeaway is? And I'm going to share this calculator while you are jumping into the chat. Check out this calculator. This calculator is going to tell you your debt to income ratio. This calculator is going to tell you the down payment assistance programs. This calculator is going to tell you what your monthly payment is. This calculator goes through the whole process. I created this calculator with my AI. And so I want to be able to share that with you. So let me open that up. And while I'm doing that, let me get a couple people to comment. What is your takeaway? What stood out for you from this last me talking as much as I did? I feel like I shared a lot, but I like to be able to share with you, with as many people that are going to be watching this replay. What about this time? Did you learn something? Was there something that stood out to you? Go ahead and comment. in there. Or if there's something that you still feel a little bit confused about, share that with me too. So I can be able to leverage that. Love down payment systems more than one. Yes. Let's see here. Oh, awesome, awesome, awesome. Planning, writing down what we want to have saved. So then exploring down payment assistance, what can be negotiated. Thank you, Carver. I appreciate that. Seychelles, or I hope I'm saying that right. It was interesting to know that if someone has collections, not everything potentially needs to be paid off. I always thought the credit report needed everything to paid off in order to qualify for a mortgage. Yes, yes. Percent of debt that, and definitely that's a big thing is realizing that you're 5%. That's all you have to pay is 5%. Percent of debt, not the total. There you go. Look at April. She's ready to teach with me. Oh, Seychelles. Thank you, Seychelles. Thank you. Appreciate that. Agreed. Didn't know that either. This is very useful information and I'm excited to get started. Awesome. The credit part and saving more money. Yes. And just so you know, I've had clients that literally have had $1,800 in their account and we were able to buy a house. It's literally once you find out where your credit is at and where we can leverage my little one there. That's how we're going to be able to. So let me share this last screen with you, and then I'm going to send this to you to everybody. You're going to get this link. It's going to you're going to be able to have access to play with this. So let me know, everybody can see my screen here with, let me just see what it looks like for layout. Okay, perfect. Let me get out of here. So this is your pathway to home ownership. So this, you could put the home price in. So let's just do what we were just doing for that 400,000, right? Like this goes up right here. You could type it in 400,000. That's 40,000. Update that. 400,000. Leave property tax at 0.30 because that's kind of normal where we're at right now. In Arizona, you can add it if it's different. Homeowners insurance, this is kind of base. If you have HOA, you can add it in there. And if you're looking at a custom rate, I have us at 6.5 right now for different DPA programs. But I can put it, actually, I want it at 5.99. So I'll just put it at 6%. So here we have our down payment assistance programs. The down payment assistance program at a 5.99, you're going to be at zero down payment, 2882. This is and it's going to break it down for you. P&I, if you're putting down your 3.5% down, 14 grand. So it says right here, this says zero down. This says, let me make this bigger. Okay, good. This says $14,000 down. And then and then it shows you about your gross, and we're going to go into that. And then if you were to use our 3.99% programs, the 3.99% programs, your payment's only $2,200. So when you reach out to me, I will share with you our 3.99% programs. So that's going to be, and Jasmine says, with absolutely no education and thinking homeownership is possible, this makes me more than ready. Oh, I love that. That's like a huge thing. Thank you for sharing that. Payment breakdown. So just to give you an insight here, principal interest is $23.14, property taxes $100, homeowners insurance $140, our mortgage insurance is $176, so our total monthly payment is $27.11, and it matches up to this top box here. So that top box includes all of this here except for HOA. Now, if I added HOA in here, so if you see a house on our website, like, oh my gosh, look at, as soon as I add the HOA, my numbers change. Look at that. As soon as I add the HOA, everything changes. Okay. So even if you're messing around with rates, it's all going to change. You can move or remove this around. Of course, I'm going to be able to tell you what your rates are going to be, but I even have like some down payment assistance programs right now at a 5.25. So this will cover this, actually, this down payment assistance program is at 5.99, but I do have a DPA at a 5.25 right now, and you won't have zero down. So let's go over here. So let's say you have your income. You go, well, how much do I need to make? All right. So remember, we went over our debt to income ratios. So let's go to monthly. Let's go ahead and say that you make $5,000 a month, right? This is if you are, that's 28.85 an hour, 5,000 a month, annual 60,000. And this is saying, hey, your debt to income exceeds 50% by $28. That's okay because remember, we can go up to 57%. But I don't want us to leverage that if we don't have to. So that's okay if you're at 50. So you can still be able to leverage that. Now you can say, oh, I'm going to pay off a debt, whatever the case. Maybe if your income's only 4,000 a month, then now you know you're at 63. So maybe this purchase price is too much. Let's maybe change this purchase price to 350 just to give us some insight there. And then now we'll go back down here. And you have to select which one you want to use as well, because then when you're selecting which one you want to use, then it knows what to put you in for your salary and your income. So here we go with $3,000 or $4,000 a month income. Look at where you're at here. You've got all this. You're able to see what your monthly payment, excuse me, not monthly payment, but what you need for debt to income ratios. So this keeps telling you here. And look at it keeps telling you what your purchase price is going to be. Okay. So this is going to leverage this. Then now, if you want to update your seller concessions, I want them to cover this. I want to know how much my cash to close calculator. Literally have your cash to close calculator here. So you can be able to leverage that. And earnest money, down payment assistance, seller concessions. So now you know your cash to close is $2,700 with the home inspection appraisal and earnest money deposit. We have down payment assistance program, FHA, rate buy down. And then once you kind of go through this, you're like, okay, I'm ready to go. You get access to my calendar. It's in here. It's since I went so big on my screen. Let me make sure that this can be, I might have to move that. Let's go. There we go. So you can be able to leverage this. I might have to update that so that way it goes there. So any questions, you're going to get access to this calculator. It goes through every single thing that you need. You can play with it based on prices, based on property taxes, based on FHA, based on mortgage insurance. This is all going to be calculated for you in that space. So you can be able to leverage this. And then I'm going to jump out and go from there. So let's see here. Any questions for me? This is live Q&A time. I'm going to give everybody a few minutes. Or if you feel like you're complete and you want to book a time for us to talk, here I'm going to put in the link, or put in the chat here, the link for you can be able to do that as well. And any questions, I'm going to open up for live Q&A right now. If you have any questions for me. Or if there's any takeaways or who's ready. Thank you so much. Talk to you later. Yes, Carver, I will be in touch. Thank you so much. That's great. Awesome. The calculator is definitely the best. Yes, I'll be sending everybody the calculator. So feel free to let me send this link here. Actually, I'll send that to you guys in the chat as well. So you guys will get that. And then everybody that's watching the replay, you will get that in the replay as well. So let me just get that there. So let's hit share. And here is the link. Let's see here. This is where you can be able to get your credit strategy session. If you're looking to get your credit strategy session, that's where you're going to want to do that. So that way you can get that. Does anybody need the credit strategy session? You can text me on that. On student loans, what is my payments? What if payments are being made? Perfect. Then you just calculate those as debts. If they're too high, then we want to leverage a smaller payment or less payment and go into that as well. So there's that, the definitely in that. Let me give you guys this link here. And great question. And let me put this mortgage calculator in there for you. Here is message to everybody. There we go. Let's get this here. I'm sorry you can hear my little man or my little baby's out there. She's in there. She wants mommy now. I told her, okay, I'm coming. Thank you. I would like to get in touch with you soon. Perfect. Looking forward to it. Here is the mortgage calculator. It's in the chat. And then the last part is going to be for you to have access to to booking with me in that space. If you are ready to book, I'm just going to put that link in there and then you guys can be able to there. So if there's any other questions, let me know. There's the calculator. Save that. You can be able to leverage that. It's going to be on your debt to income ratios. You can put in your income that you make. You could put in your partner's income, what you guys make together, and then you'll know from that point forward what exactly is that you guys can afford on a house. And then you just connect with me and say, hey, Renessa, we're ready to find out what down payment assistance programs we have. My main goal is that you feel powerful with the decisions you're making because what if I learned a lot from you? Thank you, Nicole. I'm glad you learned a lot. I'm here for you. And then Jasmine says, what if you have more than one person on a house? So what if more than one person is on a house? Yes, you can definitely add more than one person. I've seen up to 4 people buy a house together, even more than that. So that's not a problem to have more than that. So I've put in the links there, a time to come in or to schedule a chat with me. This is what that looks like, just so you can be able to see what that looks like here. When you click on that, you're going to be able to see where you can schedule a time to get your credit counseling. If you want to get the one house, three checks blueprint. And then if you want to be able to book your one-on-one strategy call here, it goes right to my calendar and you could be able to book a time with me in that space as well. Let me see if it opened up to that. Let me see where we at. Share. Nope, it didn't open to that. Okay, there you go. Yep, it did. Okay, great. So that's where that's going to look like in that space there. And then we're going to go back here. Perfect. So I'm thankful I put that link in there. I'm glad that each one of you guys are here with me. Thank you so much for taking this time to be with me. And I will be sending this recording out to you guys, and you'll be able to get this. And then you can go through it. And then I'm here. So if you ever want to schedule a time to chat with me, to talk with me, I am here and I am available. And you can do that on my calendar. And then we will go from there. So I hope I answered as many questions as possible. If there's any other Q&As, just go ahead and email me from here to there. So thank you, everybody. Appreciate you and have a great night. And you'll get this replay. And feel free to reach out to me if there's any questions regarding credit, income, buying a house, selling a house. And please refer me to family and friends because that's how I'm able to continue serving. And I appreciate you guys. Bye. Bye, bye, bye.